Welcome to the MSDW podcast. I'm Jason Gumpert, editor at MS Dynamics World. On this episode, we are talking about vendor management. It's the foundation of payment processing and a critical step in ensuring your business isn't exposed to unnecessary risk. Mekorma is the sponsor of this episode, and my guest, Brendan Coffey, Director of Revenue at Mekorma, explains that for many teams working with Dynamics GP or Business Central, they still rely on vendor management practices that are manual, time-consuming, and error-prone. Brendan and I discuss the state of vendor management today, the compliance challenges that U.S. businesses face of IRS TIN checks and OFAC sanctions, and what happens when they don't have control of vendor validation. Brendan also shares Mekorma's framework of now, next, later for strengthening vendor management maturity in Business Central and Dynamics GP. From easing year-end 1099 reporting to embedding vendor validation and finally automating compliance checks in the payment run, we explore how AP teams can save time, reduce risk, and scale with confidence. All right, I am here with Brendan Coffey of Mekorma. Brendan, welcome back to the podcast. Always fun to have you here.
I'm very happy to be here, Jason.
For people who haven't heard you on our past episodes, can you just give a little bit of an introduction of your role and what Mekorma is all about?
Certainly. My name is Brendan Coffey. I'm the Director of Revenue at Mekorma. I am part of our sales and marketing organization. I've been in the AP and fintech space for, about 10 years now. And I take an active role in helping set strategy and talking through some of the thought leadership that we work on.
I'm definitely excited to get into today's topic. And why don't we set the stage from a macro perspective of what we're going to be discussing here. So when it comes to compliance concerns that organizations have, especially related to their vendors and trade, can you talk a little bit about how you see that landscape?
Yeah, absolutely. As anybody who works in this space knows, it's a truly thrilling topic that is everybody's really excited to talk about. And of course, I'm being a little sarcastic here. But it's something that is certainly something that anybody operating a business is familiar with, is some of the obligations that they have to the government and to make sure that they're covering their bases and being within compliance and within regulation. There are two main points that we focus on. The first one is to the folks at the Internal Revenue Service. Most companies are familiar with some of the requirements around 1099 and reporting related to that. But for those who are not familiar with that, 1099 is a classification of vendors that fall into a bucket that makes it so that we need to report to the IRS who we're paying and make sure that we have the correct information related to them. This specifically falls into TIN, or tax identification number, and the requirement that we have the correct TIN number for those vendors that we're paying so that the IRS can essentially keep track of those taxes. There are some significant penalties for late or incorrect filings, and that there are anywhere from $50 to $280 per form. That number has actually just gone up, so that becomes more expensive for each and every incorrect or late filing. So that is the first piece of this puzzle. The second piece, and one that has come into sharp relief over the last couple of months, certainly with the new administration, is the delightful folks at the Office of Foreign Asset Control, also known as OFAC. This is the government agency related to those entities that are sanctioned by the United States government for a number of reasons. That list has seen, as many can expect, pretty significant shakeup. And theoretically, the obligation of an organization is to make sure that any of their payees or the vendors or suppliers that they do business with are not on that list. So those are the two primary things. The last piece of the puzzle, which seems silly but is important and both organizations care about, is the address for a given vendor. But that is kind of woven into the other two. So as I mentioned, there are fines and much more significant fines in the case of the sanction list. And anybody can do a pretty simple Google search to find some really striking examples. I think the number that I have seen is up to $10,000 if you inadvertently pay a vendor that is ending up on that list. The consequences are on the organization in question. So that is why we have been focusing on, first and foremost, educating, because there is a good number of folks, both in the customer and the partner realms, that we have helped kind of get to the point where they at least understand what a company is expected to do in this context.
All right. So plenty of risks there. Also, mostly avoidable, manageable, right? These are rules that can get complex as I'm listening to you, but they can also be managed. But I also can assume that there's different levels of efficiency, different levels of difficulty in trying to manage these kinds of regulations inside of an ERP or I guess manually some other way, right? What do you see when you talk to an organization that is relying on manual processes?
Yeah, so there's two major points that we hear, or that we're helping to at least recognize. The first one is what we just talked through, is to say that there are a dismaying but understandable number of organizations who may not be really taking any action, particularly in the context of OFAC, to make sure that their bases are covered. So from a risk perspective, there is a exposure to that risk. And that, again, a lot of companies are just not trying to mediate that. The second piece is what you referred to just a moment ago, is the incredibly cumbersome journey for a company to make sure that their bases are covered in kind of the traditional way. For anybody who has had the delightful experience of going on to the IRS website to try and facilitate that, before any validation can be done, there is a pretty arduous registration process for actually that individual. They actually request the personal tax credentials for that person to actually be able to even access the registry. It's very, very confusing, not intuitive. It's very complex, and there's not a whole lot of guidance around it. AP pros or accounts payable folks generally aren't tax experts, but they're being asked in these cases to navigate federal systems. In the case of the Office of Foreign Asset Control, it's actually even less intuitive, in the sense that at the very least for TIN and TIN matching, which is what you'd go to the IRS for, you can technically do a bulk check. You have to get your entire database out of your accounting system, format it in the way that they expect, and then it takes quite a bit of time for the system to process that, spit back the findings, and then it is up to you to go into your accounting system and make any updates necessary. In the OFAC case, it is only a one-by-one experience. There's no built-in or automated solution. So essentially, each and every time you pay a vendor, theoretically, you should be charged, at the very least, each and every time you add a vendor. But then again, from a compliance perspective, technically, when you pay it, because the list changes, it's name-only matching, which of course itself has some gaps, right? And that, again, from a macro perspective, this is entirely done outside of your accounting system. You have to manually track which vendors pass or fail, and that this really can be a ridiculously time-consuming experience. If anybody is kind of on the outsides of this, you know that your finance team usually has a pretty big headache that you may hear about around 1099 season. So that is probably what most have heard as far as what this looks like for the layman.
Oh boy, yeah, nobody is having fun with this. That is not. That's about the furthest thing from all this work. I mean, this is a ton of work, and it seems like the higher the stakes, the harder it even gets, right, with OFAC. And what does it look like for a company to go from dealing with this, manually, case by case, navigating these difficult and confusing sites, to automating it? I mean, how does a company get there?
Yeah, so we have built, for those clients that are using ERPs in the dynamic ecosystem, Great Plains and Business Central, a suite of tools or suite of solutions that help to make this less of a headache because, as we mentioned, this really doesn't add any value to the organization other than trying to navigate or mitigate risk. So our tool allows for a progression of processes that can be implemented certainly all at once, but what we've seen be really successful is a piece by piece implementation. So to start off with, and kind of coming back to that 1099 season, the biggest piece of any of our solutions is that all of this can be done from within the accounting system, which makes it in and of itself enormously more ideal than the process that they may have to go through otherwise. The first thing that we generally will work on with a client is to do a bulk validation, or at the very least, do it in big chunks all at once. So what this does is it allows for you to essentially take an audit of the data that you already have in your system, understand what errors or flags or other challenges that you may have for that data. So this we see in two different places. The first one is when you first start using our technology, is you can again do that audit all at once to get your data up and running. And then the other is that this can be done at 1099 season, significantly improving the experience. You do not need to navigate to the IRS website. You do not need to navigate to the OFAC website. You can have names, addresses, TIN numbers, and any potential OFAC match done for all of your vendors all at once and at a single point in time. So that's generally where clients will start. The other point I will make here is if there are clients that are looking to transition from one to the other, so in our case, from GP to Business Central, we found that this is one of those tasks or one of those steps that can be taken in anticipation of a migration to have the data in a really good place and have those vendors essentially up to really where they need to be, and know that you have the correct information as you migrate it to Business Central.
That's a great point. Really interesting. And I always do wonder about scenarios like that where a company using GP maybe doesn't even have the plans yet to migrate away from it, but knowing that they're investing in things like that will set them up for the future it always sounds really good to me anyway. It makes a lot of sense. Before we move on, are there other risks or concerns that you hear about when users are trying to manage this work?
Yeah, absolutely. So we talked about the one-time bulk validation. Again, there's a couple of use cases there that clients can take advantage of. And honestly, there are certainly a handful of clients that see the benefit in that and just stop there. The tool is valuable enough to either get their data to a point where they are good to go, either for a transition or otherwise, or in the 1099 season. What we generally see clients also do and what our tools allow for, and kind of as a next step, is to weave this tool into the vendor onboarding process that they take as a company. So many companies have a vendor onboarding process that can look a number of different ways, and depending on the circumstances and industry, right? But one of them definitively is to get the information related to their TIN number, their address, and then, of course, in very rare instances, actually check the OFAC list to see whether or not they are on it. So what we then see clients who are interested in kind of continuing this journey is that after we've done that bulk validation for those vendors that are in the system, they will then implement this as part of their vendor onboarding. And they can set, using our solution, they can set a couple of settings that help really match their tolerance level for balancing the exposure to risk they're willing to take, and then also their speed to payment, right? So we don't necessarily want to put too many roadblocks in the way so we can get payments out the door. But at the same time, we want to make sure that we do enough. So we can do things like prevent a vendor from being added if there is a failure. Or again, if the client is confident that we have the right information, we can bypass that. Or at the very least, we can have it flagged. And some clients will do this kind of, you can once a month, once a quarter or something like that, where they'll take the new vendors that are added and run those checks then. So that's essentially the next step that we see in this maturity model, where we now not only do we have our existing vendors validated, but we also have a tool in place to make sure that any new vendors that are added to the system are in good shape.
So what are some of the other challenges that you see organizations facing?
Yeah, so with this and many other examples, we see, again, given the focus potentially on technology, which is certainly an important one, sometimes we forget or we don't necessarily take into account really the outcomes we are attempting to achieve. So I'll use a personal anecdote. I set the intention, I looked at my credit card bill and saw a staggering amount of transactions with DoorDash and decided that I wanted to embrace some more cooking at home and eating, a little bit healthier. And so I went out and polled the audience, my friends and my mom and so on and so forth. And I picked a nice, expensive air fryer. Yeah, fast forward a couple of months and that air fryer is sitting as a decorative item on my countertop. And I think the analogy here is essentially that I likely could have made some changes in my behavior and my habits and my mindset related to food and use the tools I already have even to further that. And the purchase of new technology is not necessarily a bad thing, but ultimately that investment in an air fryer has been, for all intents and purposes, a waste of money since I have not necessarily made those changes to my behavior and habits. So to extend this into a business example is to say that what we encourage clients and partners to think about is really those outcomes, and then frame some of the behaviors and the outcomes that we want, and then back into what technology might we already have, and perhaps what that roadmap might look like from a technology perspective, in addition to some of the behaviors, mindsets, etc., that will really drive the outcomes that they're looking for.
Yeah, and I wanted to ask, speaking of the maturity model, have you laid out sort of the whole thing here, or were there other elements of it that are worth mentioning?
Yeah, the last one, and the one that in my mind is kind of the most important, particularly because of the OFAC piece, but also potentially the most, it will require some change or some thought in the organization, is to do this validation at time of payment. So as your listeners might be able to anticipate, again, there is a concern or just something that we want to think through related to making sure that we don't put too many blocks in place. But the last step that we see clients taking is to weave this into the payment process itself. So we've done it in all of our vendors. We've now done it at the time of vendor addition. But particularly these days, as that sanction list gets updated with enthusiasm, adding a check, at the very least, a check at time of payment, and then potentially also a workflow at time of payment to say, I can indicate that payments will get stopped before I can even issue the payment if there is a failure. So this particular piece takes, as I mentioned, the most thought because we want to make sure that we have things in place and we do not see a significant log jam right at the outset, right? And that's why we generally see clients take these steps in this order to get to the point where they now have really their bases covered. Because again, that theoretically, that OFAC check should be done at time of payment. So that's essentially why we recommend clients to get there eventually.
Yeah. And but it sounds like from what you've been saying, there's different ways to get there. You're probably at Mekorma and maybe with your partners, which I want to talk about in a bit, you're probably having to listen to how they operate, what really their priorities are, right?
Absolutely, yes. There's no one size fits all. As I mentioned, we have clients who see enough of the benefit either in just doing the bulk for their existing vendor base if they don't see a lot of new additions. And that the other important thing that is something that a surprising number of clients need to do some soul searching around is their tolerance level for risk. So the example here is I may do business with a lot of contractors, and that means that I'm constantly adding vendors to my system. In those circumstances, I may not actually want payments to be stopped in the case that there is a flag. And that is something that we have to kind of reflect on and make sure that the client understands and can arguably articulate to us their tolerance level for risk, and then help them understand how to configure our tools, and then potentially have a little bit of a roadmap for configuring our tools to make sure that it matches the risk tolerance that they have.
Well, let's talk a little bit more about partners. What are partners asking of you when it comes to these challenges?
I think that in all cases, partners are super hungry for this building block and kind of breadcrumb trail or trail of crumbs for not just the technology, but the process and the maturity of the discipline itself within the organization. A lot of partners have the aspiration to be that trusted partner and not just the kind of an extension of their IT team. And it is really exciting, I will say, that we can provide such a valuable, at least in the context of our solution in our corner of their process, to not just give them the tools to be more than just the technologist, but then show them how to have this conversation with their clients, as far as not just the technology, but the maturity of the organization as a whole. The other thing that we alluded to a little bit before is that many clients that operate within the Dynamics ecosystem are hungry for ways to pave the way to a migration, because it is the best for their client and they have some incentives related to it. So this is one example. This is maybe the best example. There's probably a couple others, but as far as knowing that the client may not necessarily be ready just yet to migrate, but there are a couple of ways that we can get them ready, not just from a technology perspective, but also from a process perspective for a migration that's on the horizon. So partners play a pivotal role. And I think that we're seeing a lot of partners really, again, excited to move away from and really help their clients move away from the thought that they really are just there to support the technology.
Yeah. And as I've been hearing sort of the Microsoft's fiscal 26 unfold and hearing from partners and having this kind of conversation with you, I mean, some of these sort of strategic upgrade conversations are certainly not going away. If anything, they're more important than ever. And it's great to hear some stories like this where, you think compliance, like, oh, it's such a dry topic, unfun, I think, as I called it earlier. But, it brings up so many of these really critical and broader sort of ERP excellence kind of conversations.
And I think it can also really help a partner get unstuck. If all you have is a hammer, then everything you see is a nail, right? So if we see a place where we might be getting stuck from a technology upgrade or a technology migration or something like this gives them another tool in their toolbox to be able to provide value, really gain trust, and help further not just their relationship with the client, but the client themselves. So that, I think, has been a really exciting discussion to be part of with the partners that we work with.
Well, Brendan, it's been great getting a chance to learn a little bit more about how Mekorma approaches this. I got to say, you really know your stuff on this, which is awesome. It's always great to talk to someone who understands these complex challenges. I hope we can do it again soon.
Thank you, Jason.
This has been another episode of the MSDW podcast. My thanks once again to Brendan for being here. And this message from Mekorma. If you'd like to learn more about vendor validation and management from Brendan and the Mekorma team, visit mekorma.com to explore resources, blogs, or schedule a product demo. And that's it for this episode. If you want to get in touch with me, you can reach me by email, jason@msdynamicsworld.com. For all of our updates, please do follow us on LinkedIn. Until next time, this is MS Dynamics World, signing off.